Hello everyone, welcome to the Ichimoku.co daily analysis for the SP 500 for the trading day ending Monday, January 13th, 2013. Well, a very large black body candle today, and the sellers have come into this market in force today. A very large black body. If we look back at the recent past, it's been quite some time since we've seen a black body of this size, and it suggests that after the holiday period we are now seeing perhaps some solid profit taking, and the sellers piling into this market for today's trading. The sellers have closed with control of this market by closing down towards the low of the market. They've shown some fairly strong commitment to taking this market lower, and it does suggest that this market has a very strong likelihood of trading even lower. If we look at the trend, however, technically we don't have a change of trend to the downside. For today's candle we have an outside day. The high is actually just higher than the previous high, therefore we don't have a lower high and lower low. And prior to that we had an inside day and then an outside day and another inside day, and then the market in an uptrend. So technically we haven't had a change of trend, but I suggest that for tomorrow's trading we are likely to see that change of trend. But there is very solid support below where this market's trading at the moment, even though the sellers are in control and they might continue this sell-off for another day or so. We should see some strong support coming in around the Kijun-sen, which is around 1808, and then around the round number 1800. Now that Kijun-sen corresponds with the swing highs here around the end of November and early December, and that strengthens the amount of support within this zone and certainly does suggest a good possibility of some buying coming in if we do see trading down around those levels. Now in terms of the Fibonacci extension, and because technically we don't have a change of trend to the downside, we're examining the relationship of this current first time frame uptrend that the market's in to the previous time the market's trending up. And here we've seen the market interacting with the 161.8% level for 3 or 4 or actually 5 consecutive trading days, just closing above there for the previous day's trading. Today this massive sell-off, and it does suggest a very good possibility that we will see a change of trend tomorrow with a candle making a lower high and a lower low. And with the Fibonacci retracement of the prior downtrend, remembering that technically we are in an uptrend, and we've seen the market interacting with the 78.6% level for the third consecutive trading day, being strongly rejected from there with the sellers taking strong control, suggesting that we will see a change of trend. Now in terms of Ichimoku, obviously still a bullish market in the long-term time frame. The market's trading up above the cloud, and that's supported by the Chica span, which is still just above the corresponding price action, suggesting that there is some decent upside momentum in this market and supporting what we're seeing in the longer term time frame. If you look at the Kijun-sen, that's been pointing flat for some time and price action has been attracted back towards there. Then the buyers came in and tried to move the market away from there, and today once again attracted back towards that flat Kijun-sen, and we see that very often. And here the last time when we saw a flat Kijun-sen, a similar scenario. We are looking to the Kijun-sen to act as a strong level of support, as I've mentioned. With the market trading above the Kijun-sen, we have a bullish market in the medium-term time frame as well, so confirmed by the Chica span. But if we look at the price activity under the Tenkan-sen now, that suggests that we have a bearish market and a change of sentiment in that short-term time frame. And this is the first time for some time that we've seen a bearish close down below that Tenkan-sen. This close here previously was a spinning top indecisive candle, but this is a very decisively bearish candle today with this breakout down below, and suggesting that it is likely that we will see this market trade to lower levels. Now, as I've already mentioned, how much lower it really depends on whether the buyers come in around the Kijun-sen, which is a strong possibility, or around the 1800 level, or at the top of the Ichimoku cloud, which is around 1788. We just have to be patient and wait for that to occur. Any change of trend in this big picture terms, we'll need to see the sellers really acting very strongly with very solid downside momentum. If you look at the bottom of the cloud, it's down around 1729 and a long way away from where this market is, and I suggest that we're most likely to see buyers coming back in around this 1800 level, and that's an area where we should look for some bullish candles perhaps, and only be prepared for those bullish candles. Any weak candles may suggest a small rally and then continued weakness in the market, but they are crucial levels around the Kijun-sen around 1808 and then down at the round number 1800.